Happy Monday out there, Team 42. It's your skipper here, Darius Delta, present our macro minute for Monday, October 28th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions will this week's barrage of macro and micro catalysts disrupt consensus market narratives? Our answers are investors should be on edge this week with the economic and earnings calendars jam-packed with high potential energy catalysts. In the US, the Q4 QRA, September JOLTS report, Q3 GDP, September PC report, and October jobs report may contribute to outsized volatility alongside earnings from 5 of the 7 Mag 7 names, including Google, Meta, Microsoft, Apple, and Amazon. Outside the US, Eurozone Q3 GDP, the UK's budget, fiscal budget, the BOJ rates decision, Eurozone CPI, and China's PMIs each has the potential to disrupt consensus market narratives, especially the China data. Any signs of life will likely cause consensus to positively revise its expectations of the economic impact of China's recent stimulus measures, which still may not have an inflationary impact upon commodities markets, thanks to Israel's restraint being aggressively priced into energy markets this morning. Brent crude oil is down 6%. Transitioning to our 42 Macro dashboard here, as always, we'll wrap up with a question from our community. This one's from, that's a fun name. So this was regarding max short positions on Dr. Mo, max short bond positions on Dr. Mo. Says, hi, Darius. I noticed the last ATH, you mentioned that the Treasury had their thumb on the bond market. In light of that, does that mean that a max short on something like TLT or another bond product is limited to some degree as the Treasury intervened in some manner to cap a spike in yields and term premia, thereby limiting potential gains when shorting these products? I hope that question makes sense, and thanks for everything you do. This is definitely the best product I've seen. So thank you for the kind feedback. We appreciate that. We do believe we have one of the best research products we've seen. We've certainly got some very kind feedback from several of the more respected PMs across global finance, CIOs, et cetera. That we obviously have a very happy retail customer base as well. So we're really appreciative of that feedback. So thank you for that. Getting to the question, the answer to the question is yes. I'll make one final modification. In the Around the Horn, we were specifically talking about the Fed's thumb on the bond market, but to the question's point, the Treasury also has its thumb on the bond market in terms of starving the market from bond supply and its over sort of hyper issuance on the short end of the curve in the bill market, which has been doing pretty in size since beginning of last year. So that's something that's caused decline. It kept term premium in check as well. So both the Fed and Treasury have their thumb on the bond market. So that obviously means that in a bearish VAMS TLT scenario, when the TLT is actually bearish and Dr. Mo is recommending a max short position in it, it's going to limit downside. We're not going to have yields on the 10-year Treasury, break out to 6, 7, 8%, like they probably should be. If you look at if you do the math, in terms of adding term premium back to the market, the term premium that has currently been removed from the market as a function of the Fed and Treasury, you're talking about a 10-year Treasury yield that's just shy of 6%. And obviously we're down at, 4.25, roughly 4.25 this morning. So, they're essentially, that is the impact of their thumb being on the market. So it does limit downside when shorting these things, but ultimately you still do, from the perspective, when Dr. Mo recommends a short max position in the fixed income market, it's not just from the perspective of an absolute return investor putting on one position in TLT. Dr. Mo is for institutional risk managers. It's for institutional investors. Dr. Mo needs to tell a fixed income PM that now is the time to be underweight treasuries to a max short position and overweight threat products in the fixed income asset class. And so you have to think about this from a relative return and portfolio construction perspective, not just from the perspective of what's the absolute return you're going to get taking this one single position in this particular exposure. So investors need to be aware of that. So we'll wrap it up there. Darius Dell presenting our macro minute for Monday, October 28th, 2024. Everyone have a wonderful day. We'll catch you back here tomorrow. Cheers.